Hey, what's up guys? There is a huge demand shock for Bitcoin. In this video, we'll take a look how the demand may possibly drive Bitcoin over $200,000 in 2021. Then, we'll take a look what is going on with Ripple XRP. This video is presented by BlockFi. BlockFi provides financial products for crypto investors such as high-yield interest accounts, USD loans, and no-fees trading. With BlockFi, you can get up to 8.6% APY. It works with Bitcoin, Ethereum, Litecoin, or stablecoins. Do you need cash? Now you do not have to sell your crypto and pay high taxes. With BlockFi, you can use your crypto as a collateral to get a cash loan. Now, BlockFi utilizes ACH that will enable users to connect their bank accounts with BlockFi and deposit/withdraw funds into/from BlockFi with no fees. Also, just recently Visa partnered with BlockFi to release a new credit card where users will receive 1.5% back with Bitcoin. Right now, you can earn up to $250 of crypto bonus when you open a new account and sign up with the link blockfi.com/aimstone in the description box below. So, what are you waiting for? Sign up today. Let's take a moment and look at the Bitcoin price action. Bitcoin is currently trading at around mid-$23,000. For the past week, Bitcoin was mostly consolidating sideways. We saw something similar from mid-November till early December when Bitcoin was fluctuating at around $18,000. But as soon as it formed this more or less symmetric triangle, Bitcoin broke out higher. Right now we are seeing something similar. Perhaps Bitcoin might consolidate sideways a bit more before we see that massive breakout. Let's take a look at this very bullish chart. It represents a huge Bitcoin demand by Grayscale Bitcoin Trust. Grayscale is scooping up Bitcoin at a higher rate. Just yesterday they bought 12,500 Bitcoin in a single day. This is crazy. Just to give you a quick perspective, there are 6.25 BTC being produced every 10 minutes. 6.25 multiplied by 6 equal to 37.5. There are 37.5 Bitcoin being produced every hour. 37.5 multiplied by 24 equal to 900. 900 Bitcoin being produced every day. Grayscale alone just bought 12,500 Bitcoin yesterday. We are not even taking into the account PayPal, Square App, financial institutions, and other companies who are striving to buy more Bitcoin. We have limited daily supply, and daily demand is so much higher. So you can only imagine what will happen to the Bitcoin price. Fasten your seatbelt and hop on this Bitcoin rocket. Because we're not just going to the moon, we're going to the Mars, baby. Another very interesting chart. When Bitcoin breaks its previous all-time high, it skyrockets soon after that. Back in 2012, when Bitcoin broke out from its previous all-time high, then it rallied by 38x to the top of the next Bitcoin cycle. It took only 284 days or around 9 months for Bitcoin to reach its top. In the next cycle, we have seen something similar played out. In 2013, Bitcoin reached its all-time high, which was at around $1,200 at that moment. It went into the bear market soon after that, and in early 2017, it finally broke that previous all-time high once again. Bitcoin did not stop there. By the end of the 2017, it reached close to $20,000. So that would be 17x in just 252 days. That was the top of the bull market, and Bitcoin went into another long-lasting bear market. 3 years later, Bitcoin once again broke its previous all-time high. The question is how much ROI Bitcoin can generate from this price point. In 2013, BTC made 38x in 284 days. In 2017, BTC made 17x in 252 days. And in 2021, we can make somewhere around 10x, or possibly even more. 10x from $20,000, that would be $200,000 per single coin. We can probably make somewhere between 10x and even 20x in this bull market run. We will find out in late 2021 where Bitcoin is going to be. But the real question is, what exactly will take Bitcoin over $200,000? Yes, this is true that going from $1,000 till $20,000 requires much less capital than going from $20,000 till $200,000. We know that GBTC, other companies, and high net worth individuals are striving for more Bitcoin. Also, here's another very positive demand shock. This chart represents various bonds outstanding in the global bond market by their yield, all government and non-government issued bonds. Since Fed fund rate are almost at 0%, it's almost impossible to generate some meaningful yield in the bond market. As we can see that 70% of the total global bond market yielding less than 1%. That is nothing! Global bond market is more than $100 trillion around the world. So we have 91 trillion yielding nothing. In fact, consumer inflation is much higher than 1%. I'm not even talking about currency inflation that has been increasing around 8% for the past decade. So that 91% trillions of dollars is basically a dead money. Markets can remain irrational longer than you can remain solvent. So when the market finally gets some clarity and becomes more rational, I do expect a large chunk of the bond market that yielded nothing move into Bitcoin. This is what will help Bitcoin to achieve those 6 and even 7 figures range. Now let's take a look at this cool presentation by Pantera Capital CEO Dan Morehead, where he explains why cryptocurrency is the most asymmetric opportunity in our lifetime. Let's take a look.
The first is, in my career, I've always looked for asymmetric opportunities. Interesting things like Russian privatization or Tesla Motors or things like that had a lot more upside than downside. The cryptocurrency opportunity is the most asymmetric I've ever seen. It's going against literally the biggest markets on earth, and it's starting from a very small size. Here we have a few of the businesses that cryptocurrency can disrupt, like digital payments. Obviously, gold's been great for 5,000 years, but Bitcoin's a bit better. Currencies is a $100 trillion market, and even thinking more broadly, the whole real money investment in stocks and bonds is 200 trillion. So there's a huge amount of opportunity here. The reason it's compelling for a portfolio is it's not correlated to anything else, and that's no longer true of any other asset class. When I started out as a bond trader, I just traded bonds. I had no idea what was going on in the commodity market. I didn't know what was going on in equities. But portfolio theory has been so successful, essentially all institutional investors have the same portfolio. Everyone's invested in the same things. So when you have an exogenous shock, like the SARS-2 virus popping up, everything goes down, when it's not really obvious why gold and bonds and equities all should be correlated. But the reason they are correlated is everyone owns them, and when everyone wants to reduce risk, they all go down together. So if you find an asset that has a 209% 9-year compound annual growth rate, and it has zero correlation to anything else in your portfolio, it's something one should consider putting in their portfolio. Public corporations are now doing that. That's kind of the big news of the last couple of years. Companies like Square are putting on their corporate balance sheet. MicroStrategy has over $1 billion on its balance sheet. And this is prompting a surge in the price of Bitcoin because, as I said, the money supply formula is fixed. Square's Cash App has been around for 30 months, and it's now purchasing 40% of all of the Bitcoin that are produced. So that's obviously a very big impact on the supply-demand curves. And then PayPal has now just allowed their 300 million customers to access Bitcoin very easily, and Ethereum and a couple of other cryptocurrencies. And while they don't produce their results in any kind of real-time way, you can estimate it or imply it from an exchange that they are using. They are driving their volume through an exchange called ItBit, and their volume was relatively low and steady, that white line there, until PayPal went live. And when PayPal went live, it started increasing at a very rapid rate. Within the first 4 weeks of PayPal allowing their 300 million customers to buy Bitcoin very easily, PayPal itself is already consuming 70% of all the newly issued Bitcoin. So just those two companies, Square and PayPal, are now consuming more than 100% of all of the issued Bitcoin. So in order to free up some of that, supply and demand, you're going to have higher prices. And here is a graph of the price of Bitcoin. It's such a disruptive technology, you have to graph it in a log basis. And this is it showing that over the last 10 years, it's had some incredible bull markets, and it's had 4 or 5 down 80 to 93% bear markets. So, but the kind of the fascinating thing is, even though they've had all these down 80, 90% bear markets, there's only been 1 year where the low's been lower than the prior low. So that's really the story of Bitcoin as an investment vehicle. It's wildly speculative, has enormous volatility, but most of that volatility is to the upside and driving the markets higher over a very long period of time. And the last slide is just to put that into context. Although, as Mark said, Bitcoin hit an all-time high yesterday, it's still 50% below its long-term regression trend. And so it puts it in a bit of perspective that although we've just now broken out where it was 3 years ago, if the market had continued on its long-term log regression, it would be double the price it is today.
As Dan Morehead said, there is a huge opportunity for Bitcoin to eat that currency, stocks, and especially bond market around the world. Overall, great presentation. It should give you even more conviction in Bitcoin future. Here's another quick clip from yesterday where Dan Morehead was interviewed by CNBC. Let's take a look.
Dan, thank you very much for joining us here. I mean, what are the distinctions between the way Bitcoin is being traded, used, thought about, that you think is distinct from what happened 3 years ago?
Well, we have a Bitcoin shortage right now. Every 4 years, the number of Bitcoin's cut in half, and that happened this summer. And we have buyers now, like PayPal, who just themselves are consuming more than 100% of all the Bitcoins that are issued. So when you have big institutional buyers, big investors purchasing more than 100% of the Bitcoins that are issued, is going to cause the price to squeeze up.
When you say a shortage, you mean a shortage of newly created Bitcoin relative to the demand. They're not shrinking the absolute amount, right? So, but I mean, the demand is not some naturally occurring organic thing. It seems as if there's a lot of trend following going on. It seems as if a lot of people are facilitating the popularity of it. And why does the price action have any connection to something beyond people seem to really like it?
Well, that's really it. Like if 100 million people think it's useful, that's why it has value. And there's different uses. Some people use it to store wealth. Some people in emerging market countries that have banks that might be failing or have other issues with their currency use it to store money. People use it to send money across borders if you're a migrant. So there's lots of different use cases. And 6 years ago, there were only 1 million people on Earth that used it, and it was worth $200 a Bitcoin. And now there's 100 million people that use it, and it's worth $20,000 a Bitcoin.
And, one of the storylines, as you've mentioned, is bigger institutions are certainly allocating more in this area. They've decided that it's something worth owning, perhaps, instead of something like gold. But are they any more reliable? Are they stronger hands than the individuals that seem to be driving things a few years ago?
I think so. In 2017, there was obviously a media frenzy around it. There were all kinds of newly issued tokens that really didn't have any basis to exist that were coming out. And it really was a speculative frenzy. This is being driven by the most famous global macro investors. This is being driven by public companies like Square and PayPal and MicroStrategy. Big endowments are buying. So, these are the types of people buying for, the 5, 10, 20-year horizon rather than just a quick flip.
Bitcoin shortage is no joke. GBTC, PayPal, and Square driving demand much higher as there is a Bitcoin supply shortage. If PayPal buys 70% of new supply of Bitcoin and Square buys 40% of newly issued Bitcoin, then what is GBTC buying? They are probably buying Bitcoin that was in circulation for quite some time. The Bitcoin demand shock is real indeed. Now I would like to share gear a bit from Bitcoin to something else, that is Ripple and XRP. As we know that Ripple is being sued by SEC. SEC says that they raised more than $1.3 billion through unregistered security offering. At the heart of this suit, its basic question is, what is XRP? Is it security or currency? According to SEC's suit, it's a security, and so Ripple did not provide its investors with the proper information they needed to assess any potential risk. According to CEO of Ripple Garden House, it's a virtual currency, which means SEC has nothing to do with it. The SEC has previously ruled that Bitcoin and Ethereum are not securities. XRP is different from Bitcoin and Ethereum. Those two cryptocurrencies, new coins are being created through the mining process, which is ongoing. Ripple started XRP by creating 100 billion units all at once. Ripple owns about 6.2 billion XRP, and Garden House also owns a good chunk of it. Another 48 billion XRP are being held in reserve for periodic sales. President Pish yesterday made some comments about XRP on Twitter. The manipulated Ripple pump from the last month is nearly back to zero. What a scam! Let me know, what do you guys think? Is Ripple XRP a scam or does it have a bright future? Leave your thoughts in the comment section below, smash that like button and subscribe for more videos.